Hello guys, welcome to SMC trading course. Hope you all doing great. In this video I'm going to discuss intraday SMC strategies for Indian indices, that is the popular Bank Nifty and Nifty and Indian stocks. So now you must keep in mind that the price respects the higher time frame more than the lower time frame. So in higher time frame, what you generally see, that is in 1 day or 2 day or even 3 day time frame, you see that for a trending market like this, the price retraces back to this order block here. I'm considering for an uptrending, that is a bullish market at first. So the price creates low here, high here, comes back to retrace to this order block, then shoots up, creating imbalances down here. And what does the price next do is that it creates liquidity. It creates liquidity down here, and the price shoots down to fill the imbalance down here, mitigate this order block, and then shoots up again. So in higher time frame, you see that there is an order block here, and the price is going to break because it is bullish in higher time frame. So generally, when you see that there is imbalance here and there is an order block, unmitigated order block here, you know that the price is going to mitigate this order block. And when you see the 1 day time frame, you have to wait for days for your entries to be activated here. But for intraday, you're not going to wait for so long. So when you see that there is imbalance to be filled and the price is coming down, you counter trade for this amount of time until it comes back to this demand zone here. And after this demand zone is mitigated, you trade bullish in intraday for this stock or indices here. So when you see this, that the price is going down to fill this imbalance and mitigate this order block, what you see in higher time frame for this downtrend is that you look for short entries here, and when the price comes and mitigate this order block, you look for change of character in lower time frame here, and then go for long positions here. So first I'm going to explain you this position up here. So if I zoom this position and go on to lower time frame, what you see is that there might be a huge demand order block here. And if this is in 1 day time frame, I am going on to 15-minute time frame for intraday trading opportunities. And what do I see? That the price comes down like this, or it may consolidate say for a bit, and then it shoots down. And what it does next is that it shoots back up because huge amount of buy limit orders are set here, and these buy limit orders gets activated. And what you see next is that it causes change of character up here, breaking this high. And when you see this change of character here and the price bounces back from this demand zone, you could identify this as a bullish market because the price comes back to this higher time frame demand zone and the price is going to move back up. So what you do is that you wait for the price to tap into this demand zone here and then cause a change of character up here. And then you wait for the unmitigated order block here to be tapped and then put a long position here, targeting this high if you are doing intraday, or if you want to hold this stock either in futures or in options where you find good leverage, you could win high risk to ratio trades. It may be 1:20, 30 and so on. So what you see is that for this trade, you see that the price is moving down, causing simultaneous breakout structure here. And what it does next is that it causes change of character up here. So you mark this as change of character, and you wait for this order block to be tapped, and then you place your position down here, targeting maybe this high for if you want to trade intraday. And if you want to hold this trade for few days, then you could target maybe this high. So if I zoom this order block in higher time frame, your position might get activated here, and you are going to place your take profit levels here. These are the trades you can take in intraday if you are targeting this high. But if you hold these trades for a longer period of time, you can win higher risk-reward ratio trades. Same is the case for downtrending, that is a bearish market. What you see is that the price moves up, it gets this order block down here, shoots down, creates liquidity here, and what does the price do next is that the price shoots back up to grab this liquidity here and then shoots down again, creating breakout structure down here after it taps to this order block and clearing all these liquidities. So if I zoom this area, I could see that there is a supply order block here. And what does the price do? The price moved back up and it caused breakouts, change of character here, breaking this structure. And what did the price do next is that it taps back up to this unmitigated order block and then shoots down. So if you see an order block here, what you do is that for intraday opportunities, you place your trades here, putting stop loss above this level and targeting this high. If you want to trade intraday and exit your position on the same day, but if you want to hold that trade for long and win higher risk-reward ratio trades, you can hold till this low here. So what you do is that you take your position here and targeting this low. So you win higher risk-reward ratio trades if you hold it for longer period of time. And now I'm going to show you another strategies, and this is counter trading. It is a bit risky, but if you practice and master it, you will get good intraday trading opportunities. So for this structure, I'm showing you. When you see that it is a bullish market and the price shoots up, creating imbalances here, and there is an unmitigated order block up here, and you know that these imbalances will be filled and the price is going to retrace back to this order block down here. So in a higher time frame, you see that the price is moving down. Price is moving down, creating liquidity up here, and then moves up again and then shoots down, again creates liquidity here, again moves up again, creates liquidity, and then shoots down again to mitigate this order block, and then shoots up again. So this is a counter trend strategy. What you do is that when you see that the price is moving down to fill this imbalance and mitigate this order block here, you wait for a change of character here, because when the price moved up, it did not move up rapidly, it moved with the breakout structure to the upside. For this, you may say that the price created this breakout structure to the upside, and it moved simultaneously up. For this, move up, and after there is imbalance here and an unmitigated order block down here, you know that the price is going to move down for, you may say, 10 days or 15 days and then shoot back up again. You wait for the price to break this low here so that you could identify this as a proper change of character, and you then go for short opportunities. So this is a counter trend trading strategy, and it is a bit risky, but if you trade well, you can win good amount of money. So you see this liquidity is down here and imbalances up here and an unmitigated order block. So wait for this order block to be mitigated, then the price shoots down again, then you wait for this order block to be mitigated and then shoots down again. Because this is on a very higher time frame, you know that the price is going to retrace back, you could trade this counter trend strategy. So what happens is that if you move on to 15 minutes, for this downtrend here, you could see that in 15 minutes that the price is moving like this, comes back again to fill this order, to fill the imbalance here, mitigate this order block, and then shoots down again, creates liquidities, and then it shoots up to mitigate this order block, and then moves down again. So since it is a bit risky, don't target too high. If you see clear imbalances down here, you could target this imbalance to be filled, but for most of the cases, you could target this low. for intraday opportunities. I think I've made you understood. Same is the case for an uptrending graph. If you see in higher time frame that the price is moving down like this, creating liquidity, and you know that the price is going to fill this imbalance and mitigate this order block and then shoot down again, because there is an unmitigated order block that is left to be filled here. There is imbalances down here, so you know that the price is going to fill this imbalance, mitigate this order block, and shoots down, causing breakout structure to the downside, causing this breakout structure. So when the price is moving up, you move on to lower time frame for this area down here. So what you see is that there might be buying opportunities. The price rapidly shoots up, creates liquidity, then shoots down to mitigate this order block, and then shoots up again, creates liquidity, then comes back to this order block and then shoots up again. So this is a bit risky, I'm telling you again, but you could trade this easily, because in indices you are not going to wait for days for the price to come and tap up to this order block. So you can trade counter trend in Bank Nifty and Nifty when you see that the overall movement of the market is bearish, but you could see that there is an unmitigated order block to be mitigated and the price is moving up to fill the imbalance here. So this is a counter trend strategy and you must remember this. So this is long position that you take, and if I am taking this position here, what you can do is that you might target this high, or if you are willing to risk more and go aggressive, you could target this high too. And this is how intraday strategies play out, and you must practice this and practice this a lot. And now I am going on to live examples. So see these live examples. It will help you a lot to practice and detect the perfect order blocks and help you win more trades. And I'm going to show you how you can win higher risk reward ratio trades on the swing trades that I've given you, so that you don't go wrong. So now I'm going to show you from live examples how you're going to trade intraday. So first you should go to the higher time frame to determine the movement of the market. So as you can clearly see that the market is moving down, creating lower highs and lower lows, causing breakout structure to the downside. But what happened next is that it caused this breakout structure up here, breaking this high, and a shift in direction to the upside, causing change of character here. And next what happened is that the price broke this high too, causing breakout structure to the upside. And as it caused this breakout structure, and you could clearly see for this move up, there are order blocks here and down here. And you could see that these order blocks are not so much valid because there are very less imbalances. But here you could identify imbalance here. And there are gaps to be filled, little gaps to be filled here. So this is a very valid order block, and the price is going to retrace back to this order block, and this is a discounted fib level, which is below 70% to 100%. But when you're going to identify these order blocks, you could see that there are two candles, and these are not prominent candles. So I'm going to 2-day time frame. If I could see a proper order block, and here you could clearly see that this is a perfect doji candle and a perfect institutional candle. So you're going to mark this order block, and it perfectly matches with your fib levels for this move up, and there are imbalances to be filled here. So the price is going to retrace back to this order block and then shoot up again. And for this move up, you could see that there is another supply order block here. There is imbalance, but this imbalance is filled and it shot down again, but this imbalance is not yet filled, and it creates liquidity up here. So the price is going to retrace back, fill this imbalance, grab this liquidity, and then shoot up. So it's a sure shot that if you're going to take a swing position here, putting stop loss below this order block, the price is going to give you a good 1:4.2 risk reward ratio trade if we are going for swing trading. But now I'm going to show you the intraday trading for Bank Nifty on this trade. So for intraday, I have to zoom this level. because this is the place where I am going to place my buy orders. So for intraday, I'm moving on to 15-minute time frame. And in 15-minute time frame, I have to look for change of character towards the upside. So here you could clearly see that the price moved massively down, creating huge amount of imbalances down here, and the price retraced back and then moved down, created another high, moved down, but it failed to create lows, further lows, and it caused change of character up here. It retraced back and then caused change of character up here again. So this is a valid change of character up here. So I'm removing this arrow and I'm focusing on this zone. When you see this change of character towards the upside and you see a valid order block here, another order block down here. As you identify these two order blocks, what you do next is that you are going to look for the discounted order blocks. And what you see, if I'm going to exclude this part, what you see is that these two order blocks matches with your fib levels, discounted fib levels. So you target these two order blocks, and what you see next is that this order block has no imbalance. This order block is already mitigated by this candle up here. The wick mitigates this order block. It creates another order block up here and then shoots up again, causing this breakout structure towards the upside. And there is huge amount of imbalance which is left here, which will be filled. And what you do as a intraday SMC trader is that you place your limits here, putting stop loss below this order block. And for intraday, if you're not going to hold it for too long, you could see that there are areas of imbalances here. So you could target these areas. So you move your tick. So you see a valid supply zone here. There is imbalance down here. So I'm going to target this zone, targeting up to 39,600. 39,000, slightly below this 39,600 level. But if you're going to hold it for a bit long, you could see that there are huge amount of imbalance which is left to be filled here, and there is a lot of gaps. So it depends on how long you're going to hold this trade, because this order block is going to play out from a very important demand zone, and this demand zone is from higher time frame. So this is a very important order block, and if you're going to the lower time frame, you're going to win very big. If I'm moving to 1 day time frame, you could see, so as the price moved down, there is liquidity down here and there is imbalance to be filled. You could easily target this. If you are going to hold it for long, so it depends what style you are trading. If you are going to trade for shorter period of time, if you are going to hold it for 1 or 2 days, or if you are going to hold it for long. So if I'm going to 15-minute time frame, you could see that these are the levels I might target. So I'm removing all these. And this is a clean 1:26 risk reward ratio trade. So this is how you place your long position, and wait for this trade to work out. And what happens next is that it creates levels of liquidity, and it clearly taps into our order block. And next, see what happens. Yes, it's gathering orders. Okay. Yes, and it's shooting up again. So if I'm going to higher time frame, say 4 hour, and this is how the yellow trade plays out. So this is how SMC trades play out in Indian markets and how you could trade SMC in Bank Nifty. So moving on to the higher time frames, and now I'm going to show you how you trade counter trend on this index. And as you see that there is a valid order block here and there are imbalances up here. You're going to trade up to this level and not more than that, because you know that the price is going to shoot up from this demand zone here. So here you see that these imbalances will be filled, and now moving on to the lower time frames to perfectly determine the structures of the market as it shot up. So if I go to the lower time frames, you could see that the price made this low, made this high, made this low up again, made this high, made this low, and again shot up again. And what did it do next is that it created levels of liquidity down here. You could see the double bottoms. And what did it do next? It grabbed this liquidity and it caused change of character down here. You could perfectly see that this low gets broken, and it caused change of character and break of structure of this low. So this move down is a clear indication that the price is going to retrace back down to fill this imbalance down here and move up again. So what you do is that you move on to higher time frame. You know that the price is going to move down. So what do I do next? Removing all these drawings. So you have marked this as change of character, clean change of character, because in 2-day time frame you're not going to perfectly identify this change of characters. And what you see next is that the price moved rapidly down and then moved up, not creating higher highs. So there is a general tendency that the price is going to move down again. So as a SMC trader, what you see that for this move down here, you could see that there is imbalance here and a clean institutional candle up here. So you wait for the price to retrace back up to this order block, clearing these liquidities. You see, these are the clean liquidities. There are many traders who are going to sell at this point of time, but the price is going to retrace back to this order block and then shoot down again. So if you're going to go for swing position, what you do is that you place your short positions down here, putting stop loss just above this level and targeting maybe this order block down here. So it's a clean swing trade with 5:6.8 risk ratio trade. And next what you see is that there is a clean breakout structure to the downside. You see another clean order block up here, and as it moved down you see another clean order block up. So now suppose I am taking this order block for example, and how are you going to trade this order block? So this is a clean order block here, and the price is going to come down to clear all these liquidities here, and then the price is going to shoot up from this demand zone here. So if I'm going to target this order block, I'm showing you the example for this order block and how you're going to trade from this order block and short from this position down here. So now moving on to 15 minutes. So here you could clearly see that the price moved up, made lows, moved up, made lows, moved up again, hitting this low, and then what it did is that it consolidated here for a bit and then shot down here. So as it shot down, it created this change of character down here. So now there is a high chance that the price is going to move down to this higher time frame demand zone here. So as you see that the price is moving down, what you do as an intraday SMC trader, that you mark the valid order blocks. You see one order block here, And as you could see that there are multiple order blocks down here. So you go to variable time frames to clearly identify these order blocks. There are multiple order blocks. There is another order block here. So which order block to consider? So now you go to multiple time frames, and if I go to 30 minutes, I could clearly identify that there is a buy candle before this sell here. So as an SMC intraday trader, I am going to place my limits here, putting stop loss above this level, and if I'm going to hold it for long, I could target this level. And if I'm not going to hold it for long, there is imbalance to be filled here. You could put your partial take profit levels here because the price is going to fill this imbalance. And if you are going to hold it for too long, you could target this level. So what you do is that I'm moving to 1 hour to see how this trade played out. See what does it do? It exactly played out very clean. It's a good 1:20.6 risk-reward ratio trade. And if you are going to trade intraday on Bank Nifty or Indian stocks, you will win high risk-reward ratio trades. But you have to be patient and you have to wait for your trades to come near your zones and trade accordingly. So I have shown you how to trade continuation and counter trend strategy in SMC trading. So now I'm going to show you how you trade intraday in stocks, and even in intraday you could win very high risk-reward ratio trades. And if you're going to trade intraday, first you have to go to the higher time frame because the price respects the higher time frame more than the lower time frame. So as you could see that I have shared this analysis on Bajaj Auto. 2-day time frame, because there is a clean order block, there is imbalance, there is liquidity, and the price broke this minor structure and this major structure here. So there is a high chance that the price is going to retrace back to this order block and shoot up to this level to hit our take profit levels up here. So if you're going to trade swing, what you do is that you place your positions here, putting stop loss below this order block and putting your take profit levels up here. But if you're going to trade intraday, what you do is that you target this zone. So what you do is that you wait for the price to tap into this zone and then you move to 15-minute time frame. And what do you see next? There is huge imbalance left over here to be filled. There is a gap here which will be filled, and the price created this range of consolidation. You see up here, then shot down, then again created this range of consolidation down here, and this candle swept all these liquidities down here. And what did the price do next? Let's see. The price shot back up again, breaking this high here. So as a SMC trader, you target this order block because this is a doji candle. Yes, there is body, but the wicks are huge. So you target this candle as a valid order block, and there is imbalance, and there is imbalance which is to be filled here. That is the gaps up here. So if you're going to trade intraday on this stock, what you can do is that you take your positions here and you may target this high because it caused this liquidity up here. And if you are holding it for a bit longer, you could target this imbalance here and you may target this supply zone. But if you are seeing the high time frame analysis, you target this high. So if you are taking lower time frame entries, you could win higher risk-reward ratio trades. So now moving on to our lower time frame analysis. You see that the price tapped into this order block, demand order block here, and there is a massive reaction up here creating this imbalance or fair value gap here. And what happens next? You see a clean institutional candle up here with a lot of wicks and very small body. So you consider this as an institutional candle. You place your limits here, putting stop loss below it, and let's see how this trade plays out. So I'm moving to 4-hour time frame. Let's see how this trade plays out. What happened here? The price nearly went down to grab this low, but we're lucky enough. But yes, the trade played out very well. Giving a good 1:14.09 risk-reward ratio trade. So if you're going to hold this trade and have lower time frame entries, you could win a lot more than your swing position. But if you're going to trade intraday and exit your position on the same day or few days within that, you could take this entry. And even for this case, it's a good risk-reward ratio trade. 1:5.63. But if you have your high time frame analysis, you can win big. So now moving on to the another analysis that I've shared, that is Jyoti Lab. Here you could see imbalance and liquidity formed here too. Price is going to retrace back and then shoot up. So as this price retraces back, we're going to target this zone down here, and then what you do is that you move to 15-minute time frame. And next, what you see, what did the price do? Okay. You see that the price is moving down with lower high and this lower low, and then the price moved up. So I think you remember the structure that I've shared you, that whenever you see this structure being formed and there is reaction up, was a change of character towards the upside, you look for these order blocks down here which grab the sell side liquidity here. So what you see here is that it caused the change of character up here, and it grabbed all these liquidities up here too. What did the price do? It grabbed the sell side liquidity and then it grabbed the buy side liquidity. And this is a very important order block that you should keep in mind. This is a very important order block. So if I see this order block, this is a massive order block. So I'm going to variable time frames to find a clean order block than this. And when I'm going to 10-minute, I could see a clean doji candle down here. So this is the candle which is responsible for this massive move up. So what I am doing is that I am going to take long position from this zone and putting my stop loss below this low here, because it might grab this low and then move up. And you can target this high. And now if I move to higher time frame, let's see what happens in higher time frame. I could see that there are wicks here. There is chance that these wicks will be grabbed, and there are wicks here too. There are high chance that these liquidities are grabbed and the price shoots up. So if I'm going to trade these, I book most of my positions here and book rest of my positions up here. So if I go to 15-minute time frame, let's see how the trade plays out. If I'm going for 1 hour, it will be a bit quicker. There are liquidities up here, and you could see that there is imbalance which is left to be filled. So you could target this order block. So let's see how this trade plays out. Either it hits our stop loss or hits our take profit levels. Oh my god. It taps back into our order block again. And I must say that when you see that the price is creating more liquidities and consolidation here, you might book most of your position up here. Let's see how it plays out further. So this is how the trade played out. It's consolidating for a longer period of time. It's still 1:10 risk ratio trade, and I'm still holding it till this level. And now moving on to another stock, that is Jindal Steel. You could clearly see, and I've shared this trade with you. You could see that there is huge amount of imbalances here, and there is a clean order block which tapped into this previous order block and then gave a massive move up. So the price is going to retrace back to this order block and then shoot up again. And for intraday, I could see that there is this liquidity, and firstly I'm going to target this liquidity up here. So if I move to 15 minute, I'm going to see long opportunities. From this zone, what did you see? That the price moved down, created this low high here, and then moved down again, created this low, but it did not break the high with a closing candle, so you don't consider it as a valid high. But what it does next is that the price broke this high here. So after you see that the price consolidated for a bit and closed above this level, you consider this as a change of character in this demand order block, and you look for trading opportunities here. So as you see that there is imbalance up here and the price is creating liquidities, what you do is that you mark this as your order block, put your long positions here, putting stop loss just below it, and if you're less aggressive, you could put a stop loss below this wick, because there are many times that the price is going to grab these stop losses and then give a move. So what you do is that you could see that there is liquidity and the price is going to grab this liquidity up here, so you may target this liquidity, and it's a good 1:16.85 risk ratio trade. So if you're going to trade intraday and hold it like swing, you are going to win much more. And now moving on to another example, that is Alkane. Here you could see that this is a valid order block, this is a valid order block, the price taps into this order block down here, and let's move on to 15 minutes. To see if there are any opportunities down here. As you could see that the price made this low here, made this high, made this another low, made this high, and what happens next is that it broke past this high, creating change of character up here. And while creating this change of character, you could see that there is this clean order block down here before this massive move up, and there is liquidity down here. So what you do is that you place your trades there, putting stop loss below this level, and targeting this high for initial profits and this high for major profits. So if I'm moving to 4-hour time frame, you could see that this trade played out very well, and it's a good 1:, the 25 risk reward ratio trade. So if you are going to hold it for long with lower time frame entries, you could win high risk reward ratio trades. But if you are going to exit your position on the same day, what you can do is that you could target the nearest high up here, this high up here, and this is how this trade played out. And here also you could see another entry coming in, but this trade did not play well. The price tapped into this zone, made a move up, breaking this minor highs here. There is this order block. What the price did is that it shot up, hitting our stop loss. And here you could see that there is liquidity here. The price grabbed this liquidity and then shot up, making a clean order block up here. Yes, there is a very little amount of imbalances, but since this order block is a order block that grabbed liquidity, it is a very high probability order block, and you can target this order block. But this order block hit our stop loss and did not meet our take profit levels. Yes, this is it, because all trades do not play out well, and there are trades where there are many missed entries, stop losses, but in the long run you win. So this is the end of this session. Hope you have understood, and now moving on to the next session.